Welcome to Xpertifi newsletter. We will be discussing current banking news to keep you updated and informed. Let's dive into the news from last week. Banks look to form their own self-regulatory body for fintech. Banks are planning to create a new organization under a special section of the Companies Act to apply for a license to regulate the fintech sector. They are also talking with groups like the Payment Council of India to join this new organization. In May, the Reserve Bank of India issued final guidelines for setting up this regulatory body for fintech companies. With the rise of digital banking and new technologies, it is important for banks to stay updated on the latest trends and challenges in the fintech world. RBI to banks: give borrowers 3 weeks to respond before labeling the accounts as fraud. In a ruling by the Supreme Court that banks must follow fair practices and cannot declare an account as fraud without giving the borrower a chance to be heard. The RBI also said that banks must explain to the borrower why their account is classified as fraud. Banks must send a detailed notice to the borrower explaining the suspected fraudulent transactions. They need a proper system for issuing these notices and reviewing the responses before making a final decision. RBI also said that the borrowers must be given at least 21 days to respond to the notice. Banks plan to offer more interest on retail deposits. Indian banks are working harder to attract savings from regular people by offering special plans with higher interest rates, usually about 0.25% to 0.3% more than usual. Banks like SBI, Bank of Baroda, Indian Overseas Bank, Union Bank of India and Bank of Maharashtra have new deposit plans offering 7.25 to 7.3% interest for periods of about 400 to 440 days. They are also giving an extra 0.5% to senior citizens. Experts say that banks are offering these high rates for shorter time periods because they expect interest rates to start going down later this year as inflation remains stable within the limits set by the central bank. More household savings are moving to mutual funds. People are now choosing to invest their money in markets and mutual funds instead of just keeping it in banks, said Reserve Bank of India Governor Shaktikanta Das. While bank deposits are still the main way people save, their popularity is decreasing. More people are now putting their money into mutual funds, insurance funds and pension funds. Traditionally, people have mostly invested their money in bank accounts. However, there's a growing trend of people preferring to invest in mutual funds and other financial products. Microsoft outage shows 10 banks and NBFCs experienced minor disruptions. After a big outage in Microsoft services, the Reserve Bank of India checked to see how it affected the Indian banks and financial companies. They found out that about 10 banks and financial companies had some problems which were either fixed or being worked on. To handle the situation, the RBI advised banks and financial companies to take steps to ensure they keep running smoothly and can handle such issues in the future. Before we say goodbye for now, let's see how the various indices performed last week. Xpertifi has launched a banking course that guarantees 2 interviews with banks and NBFCs within 1 month of completing the course. So make sure to register yourself and inform your friends and family as well. Follow Xpertifi for banking, jobs and news on Facebook, Instagram, YouTube and LinkedIn. See you next week with more news. Till then, take care.